Hey everyone, this is Calvin here. Hope everyone's having a great day. Let's go over some of these charts here on Apple and some of the indexes. First, let's start with Apple, and this is the daily chart. Not looking too good at all. What an ugly reversal bar. Took out the last 2 days of gains on a time count. Also, this was a time count as well and dropped time count, and now we are retesting this trend line. Will it hold? It's a second hit. The odds are not in our favor. I would not be trusting this right now. I did call that this trend line would hold for the week, but now I'm not so sure because of this ugly reversal. The volume wasn't too crazy, but this trend line is weak. Is now weak now because we're consolidating below it, above it. So this is no longer strong support. It's minor. You might get a bounce off it, maybe a little scalp intraday, but I would not trust it overnight. I would not be swinging this trend line. It could hold, but now it's about a 50-50 chance. So now we just have to stay away. The moving averages on Apple, which is a market leader, is really looking ugly. We have a death cross here. The 20 is sloping down pretty sharply now. Guys, these are little signs that you have to look for. Apple is trading below all these moving averages for quite a while now. If it does not recover soon, these moving averages are going to start coming down, and the trend is about to change. This could be a trend changer, guys. You have to be very cautious here, okay, guys? So I'm going to be very defensive next week. As you guys know, I sold out of the money puts way down here, so I'm good for the week. But next week, my target, believe it or not, off the current pattern is, sure enough, it's lining up exactly with my next major support, which is a gap fill here. So we'll have to wait and see. I'm not sure. I'm not sure it's going to happen, but just be aware that the target, if the pattern does play out, is down here. So you just have to be defensive. Maybe I'll sell puts next week below the 200, and that would be a really safe bet because this 200 is going to be solid support. And on the weekly chart, we do still have an uptrend. And also, guys, remember, I called that the 20-week moving average would be solid support, and so far we are holding it. My guess is that we will hold above it. That's my guess. So I think we will hold above this trend line by next week. But like I said, it's more of a 50-50 now because we've been banging on it. This is probably our second hit right now. So we don't take second hits. The odds are just no longer in your favor. Let's look at what happened intraday on Apple. Just an ugly sell-off the entire day. I was calling for a downtrend intraday after all these moving averages start to come down. I was saying every bounce could be sold into, and that's pretty much came true all day. So let's calculate how I got these breakdown targets, guys. I drew this trend line. I measured the target here, and I got this level of 132.90-ish. And I drew another trend line here, measured the breakdown, and also came up with this one, which is also the high one. I'm sorry, 632. I don't believe what I think I said 132. Well, it's 632.90, okay, around these areas, okay, right here. And we did hold there for a little bit. What did we do when we got to that level? We got a little bit of bounce, and actually off this neckline too, but I'll get to that later. And what did we do? We just kind of made a consolidation triangle right here. Ignore all the other lines, guys. Just concentrate on that line and this line. So we made kind of a triangle continuation pattern off my target. And what did it do? It broke down, okay? And if you go actually on the 2-minute chart, you can kind of go deeper into the candles. What did it actually do inside? We actually made a bearish type flag, broke down. Another bear flag, back tested this previous trend line, broke down. And then we came into another lower trend line, which was the lower portion of this symmetrical triangle, broke that, retested it. Now we're just chopping around this lower falling kind of channel. And now, what's intriguing enough, guys, is this red line. Okay, if we zoom way back here, out here, guys, look where this line comes from. If you guys remember, I drew this inverse head and shoulder neckline a few days back, calling that it might break out to about 660 or 650 and back test the 50-day moving average. Didn't get that. I said that was probably a slight chance because of the indexes, like the Qs, look so weak, and that probably would not play out. And sure enough, that's exactly what happened. We had actually a gap up, triggered an even bigger inverse head and shoulder pattern. See this? Left shoulder, head, right shoulder. Beautiful. This is a perfectly shaped inverse head and shoulder. You got beautiful spacing here. You have beautiful spacing here. Close. We opened above it, and then we failed. That right there, guys. That should be a red flags flashing because that's a failed move. And a failed move usually is a reversal the other way in a huge direction, and a huge move the other direction, okay? So Interesting though that this neckline is actually acting as support currently, so we'll see how that trades. Right now we are just falling in this falling wedge, and right now the only support I see is this trend line right here and the retest of the 20-week moving average, which is around this major trend line right here. This major trend line I've shown you guys for the past few days now, this major trend line here. So that's our next support. We're right at it right now. Like I said, it's minor. You might be able to play it for a scalp trade, maybe even a day trade, but I would not trust this level anymore. It's weak now, even though it's known to have a big bounce. It could pierce through it and come back up, but now it's just the odds are not in your favor to take it. First hit, yeah, that's a good chance that's just a bounce and you get a good bounce. But now second hits are the probability, the odds are just not in our favor anymore. Now let's look at the SPY, guys, the main indexes here. As you know, the SPY tracks the S&P 500. Let's look at the daily chart. This is the hour chart. Let's go intraday first. Let's go intraday really quick. I did actually call for a scalp trade at gap fill today based off this measured move, and we pretty much hit the target, but didn't quite get there. Pretty close though, pretty darn close off this three-wave correction ABC pattern. I drew the target, didn't quite get there. It was in the high 143.38, but I was more conservative. It always could overshoot a little bit, so I was looking maybe in the high 20 area for a bounce, but it didn't quite get there. Got a good bounce, and now we're just kind of consolidating here. So this level is no good. Do not take this as a trade because we consolidated above this gap fill, so it could just flush right through it. Okay, let's go back to the daily chart now and see what we're doing. Looking nothing too great, nothing too bad. But we are consolidating above the 50-day. You want to see this get back above, or this 20 is going to start curling down with the 10, and that's going to put some pressure on this market. If it stays in this range, makes a bear flag with a time count, we could see further weakness, okay? So we have to be really aware now, guys. Really be cautious. I think it's time to be more defensive in this kind of moment right now, because the uptrends on the daily chart look like they're starting to get weak, and it clearly shows on the cues. The techs have been obviously leading this market down. As you can see right now, the 10-day and the 20 are sloping down pretty bad. So any kind of bounce, actually retrace, can be shorted. Up all three of these moving averages or any back test of the neckline, any retrace there can be shorted because your stop out is very close. If it gets back above the neckline, just get out. But like I said, this head and shoulder pattern is intact. The target is this 50% retrace with this previous support, and I believe if it kind of just slowly fades here and let the 200 catch up, this could be a bounce play. 200 moving average with a 50% retrace, and you have this breakout area, that'll be a solid spot. And also it's a target for the head and shoulder pattern. That'd be actually a really sweet spot to go long. And let's look at what else we have with IYM index. Pretty much the same deal. I pretty much called for this on Saturday on my weekly analysis. So if you guys want to check back on my weekly video, I called for a bear flag, and the target was the 50-day moving average, and that's what we're getting right now. And same thing with the IYM. These are early clues, guys, of the market. These usually the techs and the IYM are early indicators of what the market's doing. So when these start looking weak, you guys have to be extra careful, okay? Like I said, the trends may be getting weaker on a daily chart, so it's really time to be very, 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 very defensive at the moment. Let's go back to Apple. I think that's pretty much it. You guys know my position. I'm already good for the week. I already sold out of the money puts way down here, so I'm just flowing with profits week after week in my strategy, so no stress on my part. But let's see what happens next week, guys. I had a great trading day, great trading week. So I hope all you guys enjoy your day, enjoy your rest of your week, and have a great weekend. Hopefully I'll talk to you guys tomorrow. I won't be trading, but if I have time, I'll do a daily update of my trades probably, and the weekly close on Friday. So I will talk to you guys later. Thanks for checking in and watching the video. Peace.